Yo, what's up finance fam? Welcome back to the channel where we dive deep into the market's hottest picks and break down what's really worth your time and money. Today, we're zeroing in on Verizon, a behemoth in the telecom space, to see if it's the cash cow everyone's been talking about, or if it's time to swipe left. Before we roll into the deep dive, smash that like button, hit subscribe, and ring that bell so you don't miss out on any of our epic financial breakdowns. Ready to see if Verizon should be your next move? Let's get it. Alright, brothers and broettes, Verizon is throwing out a dividend yield of 6.34%, which sounds sweet, but there's a catch. Despite upping the ante from $28 in 2013 to $262 in 2023, inflation's eating those gains for breakfast. Translation: the real dough you're pocketing isn't growing as fast as you'd think. It's like hustling backwards if inflation outruns the dividend growth. We need those dividends to outpace inflation, or it's a no-go. Cash flow saga. Diving into cash flow, it's like watching a soap opera. Ideally, we want a smooth, upward climb, showing Verizon can comfortably cover those dividends. But what we got is more like a roller coaster ride at Six Flags, thrilling but unpredictable. With cash flow and dividends playing tug-of-war, it's a shaky foundation for those looking for steady income to bank on. Revenue and earnings, the stagnation station. Pivoting to revenue and earnings, it's a flatline, not the heart-pumping action we crave. Revenue per share has been as exciting as watching paint dry for a decade, and earnings per share are jumping around like they're on a trampoline. For those of us looking to see our investments soar, Verizon's growth story is more of a slow crawl. Interest rates versus Verizon, the epic showdown. Here's where the plot thickens. As interest rates hike, Verizon's allure dips. It's basic finance, brothers. High yields elsewhere make Verizon less enticing, but with talks of rates stabilizing, Verizon could sneak back into the limelight. The twist: this drama might already be priced in, leaving us to wonder if there's any upside left. Valuation vibes. After running the numbers, Verizon's looking like it's hovering around fair value. If you're all about that zen, stable investment life with predictable dividends, Verizon's whispering sweet nothings. But for the adrenaline junkies seeking explosive growth and dividends that'll jetpack their portfolio, Verizon might leave you feeling a bit grounded. To cop or not, wrapping this bad boy up, it's steady, reliable dividends that won't cause you sleepless nights sound like your jam. Verizon could be a solid match. It's cruising near that fair value sweet spot, with a hint of upside if interest rates take a chill pill. But for the growth greedy among us looking to fast track to financial freedom, Verizon's slow-mo dividend growth could be a deal breaker. Bottom line, Verizon's got the goods for a low-drama, steady-eddy investment, but it might not set your portfolio on fire with rapid growth. Whether it's a buy, hold, or pass, depends on your game plan and financial goals. Stay savvy, stay informed, and above all, keep grinding towards your financial peak. And that's the 411 on Verizon, folks. Whether it's destined to be the crown jewel of your portfolio, or it's a hard pass, the decision's in your court. Got a hot take on Verizon? Drop it like it's hot in the comments below. We love seeing your insights and predictions. If you're digging these deep dives and want to keep your investment game strong, you know what to do. Like, subscribe, and smash that notification bell harder than your morning espresso. Your support fuels our fire, and we're here to bring you the freshest, most lucrative financial wisdom in the game. Until next time, keep hustling, stay savvy, and let's make that money work for us. Peace out, finance fam.